certain aspects like questions were raised, how do we handle the departmental aspects of arrest provisions? After a detailed discussion and a hectic electrifying session, to soothe our minds, we had a very delightful cultural event in the evening. Today, we have the most talked about topic which has shaken up the finance world. Cryptocurrency, the hunt for the hidden currency. So we'll be having this session today, and I call upon Madam Kelly to welcome the chairperson and the speaker for the session.
Good morning, all of you. Thank you. I hear good morning back. It was very nice. I really appreciate all of your presence over here at the right time. And we would start the session. I would request Mr. Bharat Sachdeva to escort Dr. Ashok Saraf at the dais, please. Sir. I would request Dilip Yashwardhan to please escort Madam Naina Bhardwaj, Advocate Delhi, to the dais, please. Who, sir? So if you give the privilege, we'll do it. If you want, sir, we can surely have it. Sure, sir, we do it. Where is he? I would request Mr. Gandhi, D.K. Gandhi ji, to please come on the stage. He would be escorted by Mr. Venkat Ramani to the dais. Sir Gandhi, sir. Please, sir, come on the stage. It is a request by everyone, so you should also sit on the stage, sir. Crypto, sir. Thank you. So then I think it's complete now, sir? Thank you, sir. Now we have a brief introduction by Siddeshwar.
Our speaker for the session today is Madam Naina Bhardwaj, Advocate. Naina Bhardwaj, Madam, is working as the editor of India Briefing based out of New Delhi, India, and was recently assumed charge as editor-in-chief of InFed, a platform to democratize voices of the masses. She has previously worked as a researcher with Indian parliamentarians, assisting them in policy formation in various capacities across domains, including economic, internal security, international relations, and policy matters. She also has the experience of working as a legal counsel with specialization in corporate and taxation law. Her academics, Madam holds a LLB degree as well as a postgraduate diploma in international humanitarian law. She is currently pursuing her PGD in media law. She also holds a honors degree in economics from Delhi University and has represented our country at international academy events, including research papers, presentations, and events organized by SAARC countries. Madam has won the Best Paper Award at the event. Madam has also participated in multiple debates and panel discussions. Madam, I welcome you to this session.
The chairperson doesn't require any introduction much, but still, I would like to give a few introduction about him. Dr. Ashok Saraf, the past president of AIFTP, the pillar of AIFTP, sir. Sir's father was the Justice Dr. B.P. Saraf, former Chief Justice of High Court of Jammu and Kashmir. Educational qualifications are varied. He is M.Com, LLB, and PhD. He has confirmed PhD by Gandhi University on the Guwahati University on the subject corporate taxation in India. Experiences are far. He was designated as senior advocate to Guwahati, a High Court judge at the age of 36.5 years in his 12 years of practice. He is the youngest advocate in the history of Guwahati High Court. He has specialized in constitutional, financial, taxation, and service matters, served as Special Counsel of Income Tax Department, NER, in Guwahati High Court. Amongst these, he is a beautiful writer. He has written down many books. The firstly, which two I could name would be Assam General Sales Tax Act 1993 and Assam Forest Manual. Sir is also a co-author to Assam Jail Manual and Taxation Law in Assam and Meghalaya. To add up to this, he has given feathers to be an editor also of Guwahati Law Reporters and other activities wherein he is a life member of Guwahati High Court Bar Association and Supreme Court Bar Association. Sir, we welcome you in our midst and we thank you for being associated with us. Thank you, sir. I will now call on Siddeshwar to give a brief on the subject matter and to give a bouquet to sir. Thank you, sir. Siddeshwar, please give a brief on the topic today.
As I mentioned in the beginning, the most talked about topic, cryptocurrency. Even you hear this buzz where even college students are talking about this. What is this cryptocurrency? We would have heard various platforms where this is being traded, and some of the cryptocurrency names which are known are Bitcoin, Ethereum, Litecoin. So what is this cryptocurrency? That will be dealt by the speaker. And one more aspect which was there is the Reserve Bank of India had issued a circular to ban this cryptocurrency. Later, this was challenged before the Honorable Supreme Court, and the Supreme Court said that this ban is not, it was upheld that the ban is incorrect. As this progressed into the market, there was another statement given by the government of India saying that they want to regulate this particular cryptocurrency. When this statement was given, the currency values just trickled like a big snowfall and the market crashed. Then again it slowly started picking up. With this background, today we'll be discussing about cryptocurrency impact on taxation. Under direct tax, whether trading of this cryptocurrency, will it be treated as business income or will it be treated as capital gains under the direct tax? And the latest law which has been introduced recently, the Goods and Services Tax Act, whether it will be treated as goods or whether as services or a mix of goods or services. To throw light on this topic, I call upon Madam Naina Bhardwaj to throw some light on this. Madam, over to you.
A very good morning to you all, friends. In fact, in this technical session, sitting as the chairman, I am remembering of a situation where a discussion was there on atom bomb, and one scientist was there and one politician was sitting there. and the question was there to, within 2 lines, to explain what is atom bomb. The scientist said, I cannot do it in 2 lines. The politician said, yes, I can define. गिरता है, आग निकलती है, बहुत धुआं निकलता है. My position is just like that politician who doesn't know anything about the subject. And in fact, in the morning, I was not ready to come to the session. Thereafter, D.K. Gandhi, he told me that please come. Then I also thought that taxability will come only when the income is there. So first of all, why don't I also try if I can also earn something after hearing the speaker. So I am only sitting here to learn something that how I can, after going here, how to do cryptocurrency and all those things. Taxability we'll see later on. Venkatamani is there, other people are there. They will take care of it. So with these words, in fact, I really am thankful to the organizers to give me the opportunity in the morning again to meet all of you. And I'm very curious to listen the learned speaker, and I request the speaker to kindly proceed.
Good morning, Mr. Chairperson. Good morning, Mr. President, D.K. Gandhi, sir. Good morning, ladies and gentlemen, and all the colleagues. I would first of all like to extend my heartfelt gratitude to the AIFTP Federation and especially President Mr. D.K. Gandhi for giving me the opportunity to explore this much hyped yet uncertain domain of digital currencies at this 24th National Convention. My topic for today is cryptocurrency taxation in India, and I'm honored to be presenting in front of this august house. The fad with crypto is expanding on an everyday basis. Imagine, in 2020, April 2020, the crypto holdings in India amounted to $923 million. And within a period of 1 year, this holding expanded to USD 10 billion. Imagine the kind of expansion that has taken place. And this has to do with the COVID rendered lockdown as well, wherein people, the upper class, the top 1% and 10% of the population, they had a lot of additional personal disposable and holdings in their hand. They had already exhausted other means of investments, and they were looking for more newer avenues wherein the returns on investment could be higher. And crypto definitely emerged as one of the latest fads. Okay. So now this fad also brings in several new challenges for the regulators as it has become increasingly difficult to accommodate this digital asset class within the existing legal and regulatory framework. Right now in India, we do not have any law which mentions the term cryptocurrency. There has been a bill which was supposed to be introduced in the parliament in this winter session. The name was mentioned in the Lok Sabha bulletin, wherein they spoke about banning private cryptocurrencies, but it has not been tabled yet in this winter session, so probably it will be delayed by the next 6 months. So until then, we are all sailing in uncertainty. And so problem arises because cryptocurrency is evolving on an everyday basis. The potential for its uses are endless. And especially when the cross-jurisdictional nature of these particular transactions are such that the regulators across the world, including India, are working very keenly on regulating this asset class, especially to prevent threats like money laundering, darknet, and everything that can prove fatal to the economy and security of the country. Now, due to the technological and economic particularities of cryptocurrencies, policymakers across the world, including India, are working towards regulating cryptocurrency in the most prudent manner. This is especially challenging as the regulatory landscape for cryptocurrencies continues to evolve. Now, I believe that AIFTP has both the opportunity here as well as the mandate to emerge as a relevant stakeholder in the process of finalizing this regulation by not only providing technical data-backed inputs to the legislatures, but also by holding intense discussions to highlight the aspirations to the investors as well. And this, me being the newest member probably here at the seminar, I was just at the flag hosting event and I heard the motto that AIFTP educates people. AIFTP can also, emerge as an important government stakeholder wherein government can invite consultations from the esteemed panel and learned members so as to make policies, because we represent the taxpayers of this country. I think, if I'm not wrong, the membership is strong at 10,000 presently. So imagine the kind of role AIFTP can play in fortifying these regulations in India. So before delving deeper into the taxation aspects, I would first like to draw this house's attention towards the basic fundamentals of cryptocurrency, its uses, as well as the technology it employs. I will also talk about the status of cryptocurrency worldwide as of 2021 in terms of market valuation, user base, as well as the legality aspects. We would then dive deeper into the cryptocurrency trends and statistics, especially with reference to India, including its taxation scenario at present, as well as the impending legislation. So we come to the question, the important one: what is cryptocurrency? Is it a new concept, or have attempts been made in the past as well? So the fascination with this concept of digital currency began in 90s when the tech boom happened, the IT revolution of the 90s. There were several attempts made in the past. However, there were certain loopholes wherein the people who were making these digital assets were basically the validators themselves. Therefore, we could not prevent the money laundering. However, now this concept picked up pace probably say a decade later in 2008, when a pseudonymous entity by the name of Satoshi Nakamoto first explained the concept of Bitcoin in a paper titled Bitcoin, a peer-to-peer electronic cash system. He described, he, she, they, whoever that person was, because we don't know the entity, they described the project as an electronic payment system based on cryptographic proof instead of trust. In 2009, the software was released as an open source and Bitcoin network was launched, resting primarily on three core principles. Number one, dynamics of supply and demand. Number two, a decentralized network wherein no government could tamper, no government had any role to play in it, and it was based purely on the trust of millions of peers who were operating on an individual basis, validating those transactions. And number three, cryptography, the technology behind it. So while there is no one definition, but in the most layman terms, cryptocurrency is a decentralized digital asset based on a combination of cryptographic algorithms whose existence and transfer are confirmed and recorded on a ledger that is distributed across a network of independent computers. We call these independent computers validators. Now, they are based on blockchain technology or any other distributed ledger technology. Some of the most famous technologies, cryptocurrencies, are Bitcoin, being the first one to be launched, Ethereum, Dogecoin, Cardano, Litecoin, etc. So in this distributed ledger technology, the decentralized architecture of the validator network is designed to create trust in the absence of a centralized authority, wherein in order to record the existence or transfer of a cryptocurrency on the ledger, the network's validators must reach agreement according to network's consensus protocol. Since this network is decentralized, everyone who's a part of this network can access this ledger, which stores all the information. Now, in principle, and in the absence of additional cryptography schemes of failures in security, cryptocurrency transactions are fully traceable and unalterable, and users may remain pseudonymous unless their assets are matched. For example, the crypto exchanges in India ask for KYC norms. So unless a KYC file is retrieved wherein to match transactions, you'll have to see what happened when. The details remain anonymous. However, there is a public key that is created, and all the transactions that take place, they are recorded in that public, the public key, and they are not tamperable. So basically, there are blocks that are created. Say, Mr. X created a transaction. Mr. X wanted to purchase some goods, and he spent 5 bitcoins for it. Now the payee, the person who will receive those bitcoins, he will check with each and every single computer on this network to verify whether Mr. X has those amount of funds, that is 5 bitcoins in his wallet. If yes, each computer will give a go-ahead to update their records independently as well. Now, this process with each individual sets up computers to crunch through these transactions on the copy of their ledger is known as mining, the cryptocurrency mining that we often speak about. When the miner dedicates their computer's power to solving these complex algorithms to update their ledgers, they get compensation in form of cryptocurrency tokens. Now, how is cryptocurrency acquired or generated? These crypto assets have increasingly become, a medium of payment, a mode of exchange, and they're also used for investment purposes. And they can be acquired through following means. Number one, mining, which I just explained, which is solving complex algorithms to update ledgers that we spoke about, and you get crypto tokens as compensation. Number two, we can buy them from crypto exchanges. Number three, we can get them for payments, in return of payments for our utilities. For example, there are many companies like Tesla, there are many companies like Tesla basically just kind of moved back from its initial commitment of accepting Bitcoins. However, there are many other companies like Microsoft. There is the Ruck Capital in Delhi. There is Sapna again in India, which accept cryptocurrency payments, right? And as legal tender, so there have been many reservations that have been expressed by various countries in order to accept cryptocurrency as a legal tender, especially flagged by the financial regulators, in India's case RBI. They have flagged that this particular currency, if accepted as legal tender, will erode the monetary authority of the regulator, and it will also destabilize the financial economy of the country. It will put a question mark on their sovereignty as well, given the cross-jurisdictional nature of these transactions. However, it is interesting to note that El Salvador became the first country worldwide to accept Bitcoin as a legal tender in September 2021. I'll just put in brief statistics in front of you to show the kind of fads that I spoke about that's there with cryptocurrency. As of October 2021, the market capitalization of all the cryptocurrencies put together stands at US $2.5 trillion, with over 6,000 different currencies in circulation worldwide. This market valuation, which was merely $830 billion in the beginning of 2021, witnessed a meteoric rise of 233%, led by emerging popularity of crypto tokens like Bitcoin, Ethereum, Binance Coin, Cardano. As of 2021, the global crypto ownership rates is estimated at an average of 3.9%, with over 300 million crypto users worldwide. And 18,000 businesses worldwide are already accepting cryptocurrency payments. They include Microsoft, as I just mentioned, AT&T, Trevala, a travel company, Visa, MasterCard, Starbucks, PayPal. Indian companies that stand out in accepting crypto payments include the Rug Republic, Sapna, Highcart. So the leading countries with the maximum number of cryptocurrency investors, if you can make a wild guess, which is the topmost country in the world, which has maximum number of crypto investors in the world, that is India, ladies and gentlemen. India has total number of 105 million people, that is 10.5 crores, who have invested in cryptocurrency, followed by USA, which has a mere 27 million. Imagine the difference and the necessity why India needs to act on the legislation right now. Delay is not an option for us. Yeah. So I'll just kind of brief up on the India trends as well. As per data from crypto research and intelligence business organization Cribaco, Indian crypto investments surged to over US $10 billion from 923 million in April 2020, mainly driven by a shift in thinking of young investors moving away from gold and other previous metals. Another reason that was cited by these young investors was the security that this kind of investment offers. According to Cribaco, over 105 million people own cryptocurrency in India. And this is absolutely shocking yet interesting in light of the impending ban of cryptocurrency in India that has been in talks for the last several years. So if you ask my personal opinion, I don't think the ban is going to happen. But nonetheless, we'll see as time comes. So moving on to the most important aspect, the taxation of cryptocurrency in India. Well, there is no particular legislation in India in place right now which talks about the taxability or any other regulation for that matter. So whatever I'm going to be speaking right now is purely speculative and based on research from, opinions given by certain experts as well as my little understanding of the subject. So basically, when we talk about taxation under the Income Tax Act, there are multiple heads under which the cryptocurrency can be taxed. And basically, people have been paying taxes, the crypto investors in India. So we talk about the head profit and gains from business and profession. Now, these transactions include receipt of cryptocurrency as consideration for sale of goods and supply of services, and sale and purchase of cryptocurrency as stock in trade. Mining can also be included under this head because the crypto miners are kind of operating on an everyday basis, solving algorithms, earning crypto tokens, and they're using high-powered computers for it. But there is ambiguity in that regard because certain people kind of put mining activity under income from other sources head as well. So now, for crypto transactions, that is especially trading as well as exchange buying and selling, the section 28 of the IT Act will be applied, and the definition is basically covered under section 2, subclause 13 of the Income Tax Act, which says trade, commerce, or manufacture of any adventure or concern of such nature. So moving on to the second head, income from other sources. These incomes include mining. As I said, mining can be ambiguous. It can either be business, it can either be income from other sources. So it can be mining, dealing in cryptocurrency solely for the purpose of investment, and receipt of cryptocurrency in form of gifts. These are taxable under the Income Tax Act, under income from other sources head. Receiving cryptocurrency in form of gifts, so basically the standard norms will apply. If the cryptocurrency received as gift will be taxed under income from other sources at a concerned slab rate, and cryptocurrency received as gifts worth 50,000 rupees or more shall be entirely taxable. Also, the similar exemptions will apply in this case as well. So if the crypto is received from relatives on the occasion of marriage or under will or by way of inheritance, it shall be exempted from taxation. Talking about salary and income from house property, as of now, since cryptocurrency is not recognized as a legal tender, so much so that RBI has repeatedly called for banning it, and even these speculations say that government will at the most recognize this merely as an asset class. So the question of it being a legal tender does not arise, and therefore taxation under this head is again out of question. We come to capital gains head. Under this, so when we talk about the section 2, subclause 14 of the Income Tax Act, this particular asset qualifies as a capital asset, and if a transfer takes place, it will be considered under section 2, subclause 47, under the sale of assets clause. So any gains arising out of cryptocurrency must be considered capital gains if they are held for the purpose of investment. Depending on the duration of time, if it's held for less than 36 months, that is 3 years, it will be short-term capital gain, and it will be taxed accordingly, wherein the slab rates will apply. However, if it's held for more than 36 months, in that particular case, it will be charged at a rate of 20% along with indexation. Now, it's covered under section 112, subclause A of the Income Tax Act. I would also like to talk about taxation under Cgst Act. So cryptos, as of now, the transactions that take place, they are taxable, Indian crypto exchanges basically, they are taxable under GST Act in terms of the trading fee that the exchanges add to the buying price of Bitcoin, Tether, Ethereum, etc. Furthermore, the exchanges pay GST to the government as a part of their general tax payments. Now, the Central Economic Intelligence Bureau has proposed that the taxpayers operating as cryptocurrency miners will be required to register under GST if their annual revenues exceed 2 million rupees. GST will be liable on the transaction fee or on reward, which is the currency mined. It has suggested that cryptocurrency mining be treated as a supply of service as it generates cryptocurrency and charges transaction fees, and as such should classify as an intangible asset, attracting a GST of 18%. Recent reports from the media have suggested that foreign crypto exchanges in India might also have to pay 18% GST on cryptocurrency transactions in India. Furthermore, an equalization levy at 2% might also be imposed on them. Talking about the government's stance on cryptocurrency in India, on November 23, 2021, in Lok Sabha, a bill was supposed to be introduced. In the bulletin, they mentioned a bill to be introduced in the parliament to regulate cryptocurrencies. The bill's title was the Cryptocurrency and the Regulation of Official Digital Currency Bill. And the content of the whatever two-liner content explainer read, the bill intends to create a facilitative framework for the creation of official digital currency, that is CBDC, Central Bank Digital Currency, which will be launched by the RBI. I think the pilot run is already complete, and they will be launching the cryptocurrency in the first quarter of the next financial year. So create a facilitative framework for the creation of official digital currency to be issued by the RBI. The bill also seeks to prohibit all private cryptocurrencies in India. However, it allows for certain exceptions to promote the underlying technology of cryptocurrency and its uses. Now, this was very interesting, ladies and gentlemen, because this one single statement by the government without any explanation kind of created a huge stir in the market. The crypto investors in India lost holdings of almost 400 billion, because, the prices of cryptocurrencies fell immensely. They thought the cryptocurrency is going to be banned, and suddenly everybody was out there selling currencies. But what is interesting to note is within a matter of 2 days, despite the fact that there was no clarification from the government, the crypto prices resurged back to its original. Many purchases were made at this hour as well. So, without going into the nitty-gritties of it, I would like to express my concern regarding the government stance, and this especially comes at a time when the RBI governor, Shaktikanta Das, has repeatedly called for ban, citing the destabilization of economy, but at the same time, our Honorable Prime Minister, Mr. Narendra Modi, on 2 occasions very recently, on 13th of November 2021, as well as on 18th of November 2021 at the Sydney Dialogue, he kind of outruled total ban, while at the same time highlighting the concerns that India faces with respect to cryptocurrency, the most important one being money laundering, the trafficking, the kind of investment people will make in darknet. So while highlighting these concerns, our Prime Minister definitely called for regulation against strangulation. So it is yet to be seen what the government's stance on this subject will be, but I shall rest my case here with the note that AIFTP again can emerge as one of the most potent and important stakeholders in this process, because we not only represent the biggest class of advocates, chartered accountants, tax practitioners, and I guess we as an organization have the maximum clarity on how this particular asset class can be regulated. And I believe that, representing such a large lobby of practitioners, we definitely must have a say in the manner. We can also emerge as an important organization to gain trust from the investors who are also looking for, stakeholders who can voice their concerns in the government chambers. So with that, I rest my case, ladies and gentlemen. It has been a pleasure speaking in front of you. Thank you for your patient audience.